This signal has never appeared on a Bitcoin chart until now. What happens next? That's what we're going to dive into. Man, do we have something special for you today. Something very, very rare unfolding on the Bitcoin chart for the first time in Bitcoin history. And I've gone all the way back to the Genesis block in 2009. For the first time ever, we have a golden cross between the 100-day and the 200-day simple moving averages forming. They've formed already, and now we have a developing death cross between the 21 and 50-day simple moving averages. Those seem imminent in the next 24 hours or so, barring a miracle of the most unimaginable, miraculous God candle you ever saw could possibly pull it out of this trajectory. But I don't even think that's possible at this point. This is in my opinion, a macro bullish signal colliding with a short-term bearish momentum signal, a chart pattern that literally has never, ever happened on the Bitcoin chart before on the daily time frame. So we do have a few things that are similar, not exactly the same, but similar enough that I think that we can draw some conclusions of what this is going to mean in both the near term and the long term for Bitcoin. So glad to have you with me. If you're new to the stream, my name is Keith Allen. I'm a work from home dad. I am a full-time trader. I am also co-founder of Material Indicators. I'm glad to have you with me today. Live chat is open. If you've got questions, I'll do my best to answer your questions. If you've got insights, I especially want you to share them with us. That always makes the streams more engaging and more fun for everybody. So by all means, if you've got opinions, chime in. If you haven't done so yet, do me a favor, smash some buttons, help me grow the channel, hit that like, hit that share, invite some of your friends, your fellow traders and community members into the stream. And most especially, make sure you hit that subscribe little bell up top so you don't miss any of the future streams. Let's just climb right into it, right? The first thing I'm going to show you here, I'm going to share a chart on the Bitcoin daily chart, and we'll look at this phenomenon as it is developing. I actually talked about this a little bit last week. I saw this developing, saw it coming, and today did a really, really deep dive into this to see if I could draw any more conclusions. And just to make sure that I wasn't missing anything, I got some help from AI to help me screen these charts and make sure that what I was seeing was accurate and help draw some conclusions and paint some scenarios that we might see develop here in the coming days, weeks, and months. So let's go ahead and climb in. I'm going to start here on the candle chart. As I said, let's go ahead and pull that one up. Let's get to the right chart. I guess would be good to have that one loaded up. So I actually have a chart here that I have labeled death crosses. And this is a bit of history in this. But we're going to focus, well, first let's focus on what's happening right now. You can see down here, the my moving averages are labeled, okay? And I'll show you what that labeling is here. The green 21, the red is the 50, blue is 100, purple is 200-day moving averages. And so as you can see, we have a death cross has formed, a golden cross is formed here between the blue 100 and the purple 200. And right here, the green 21 and the red 50, they are on an imminent glide path for a death cross. I'm going to show you exactly what I'm talking about here. All right, not quite there yet, but I mean, this is going to happen in the next 24 to 48 hours. And the only way I see this changing is if just a miraculous big giant green celery stick sprouts. I'm talking, I don't even know if a 20% candle could pull us out of this trajectory. At the very least, it could make it a very shallow crossing here. And we do have a similar situation here that I'm going to share with you in the charts that resembles this. So we'll take a look at that as well and see how things played out in that particular event. So at the moment, we have Bitcoin trading just under that 106K level. That was a very important level. Now, how do we get here? maybe we should backtrack a little bit and look at that. Over the weekend, obviously, we had some major things developing. We had the issue in Iran, U.S. bombing Iran, and the market did not respond very well to that. We saw a big dip over the weekend, but where did that dip land? Where it landed is really, really interesting to me. So not only, the 100K mark has been somewhat psychological, um, in terms of it being a resistance level, but it has developed some technical merits, I think, just because of the time that we spent above and below it, and we've yet to really validate that RS flip, right? We engaged with that level way back in December of last year. We broke down pretty quickly. Had all these wicks and candles below that never really established themselves above. Had a couple full candle bodies above, then a big breakdown. Um, Fought for it again, lost it quickly, fought for it again. Again, not a lot of full candle bodies above, at least not consecutive ones, until it broke down again and again, and ultimately took us down on a pretty nice dip down into the 70s back in April when we had that first tariff announcement. And this was this is what, in my opinion, marked the bottom here for Bitcoin. We did have a little double bottom right here, right? And so since then, we have obviously climbed back into above the trend line. We have climbed back above the 2025 yearly open, which was a very important level. We tested this several times until finally breaking back above. And not only did we break above that open, the first week, so the annual open, the quarterly opens, and the first week of those periods seems to have some technical merit as well. And as you can see here, this is the 2025 open was down here at 93.4K, depending on your exchange, might be give or take a couple $100. And then the first weekly open occurred right here at 98,361. This is the index, right? So 98,361. Look where price went over the weekend. 98,330. I mean, within $30. So yes, it pierced the trend line briefly, but it recovered it very quickly. Lost 100K, which is an invalidation in my opinion, and bounced from this weekly open. Then the next consecutive candle, which was yesterday, again breached that 100K level, again, in my opinion, invalidating the RS flip, meaning we could again go back down there. But boy, just a beautiful bounce from both the weekly open and then from the trend line here yesterday. Really, really nice setup here. And obviously yesterday we had a nice green candle, and that seems to be following suit today as we have a ceasefire, or allegedly a ceasefire, happening in between Iran and Israel. A little bit of noise going on between that at the moment, so not sure if it will actually hold. But in terms of the technicals on the chart, I mean, that's a good reason for things to bounce. But regardless of what's happening in the conflict and the hotspots around the world, the technical levels in the charts are as clear as you could ask for them to be. I mean, absolutely perfect, picture perfect retests of support, almost too good, to be honest with you. So this is very interesting to me, right? This is very, very bullish in my opinion, although I did expect to see price maybe challenge this 200-day moving average, potentially even the 2025 open. It has not happened yet. And here's why I say yet. We still have some factors here that could pull price down again. One, of course, just from a technical standpoint, the death cross that is looming here, right? So yes, these are moving averages are indeed lagging indicators. However, the trend tends to continue, at least for a short period. And yes, the 21 and the 50 are considered low time frames relative to the 100 and 200-day moving averages, which are considered high time frames. And so as it's reasonable to think that we could see some short-term price consolidation or even reduction and consolidation before continuation of the long-term uptrend. And if we look at history, and history doesn't always repeat itself, but it sure likes to rhyme. And we technically don't have the exact same scenario where we have a death cross between the low time frames happening within 24 hours of the golden cross between the high time frames. But we do have some similar scenarios that I want to show you here in the chart. And so let's just go back in history here a bit and see if we can identify all the times. I'm going to go all the way to the beginning, see if we can identify all the times that we've had these kinds of scenarios developing. And the first one that I've really found, and there's a difference here in this one. The first one I found is here back in 2012, where you can see, remember in this scenario, we have the golden cross between the high time frames happening before the death cross. And in this scenario, there was a death cross that happened first. And then we had the golden cross happen. Oh, let's see. What's this one? A couple weeks later. Okay. And so we had a period of consolidation and then appreciation. Now, this is back when Bitcoin was in single digits, right? But I'm just showing the technical side of how this developed. That basically led to a period of volatility, short-term volatility, right? We had the first death cross up here. We had a spike downward, not a spike, but a dump downward, some volatility, some consolidation, a little more volatility, more consolidation. And then eventually, this now took until June. This began in February. So it took several months for this to develop, good consolidation period, and then up price went. Now, there was there another death? There was another death cross here. Okay, so we had the golden cross. Again, I'm looking for the blue 100 to cross above the purple 200, which happened right here. And then shortly after that, we saw we saw another death cross between the green 21 and red 50. Very brief period of time. And it happened, right? It unwound and then it wound back up, right? It wound. Here's death cross between the green and the red 21 and 50. Here's a golden cross, followed by another death cross, and then ultimately another golden cross that was the beginning of that leg up. Moving on through history, we have another scenario here back in 2013. Are there any similarities to this one? Well, you can see where the golden cross happened here between the blue 100 and the purple 200. And this was a near miss. This is similar to what we're seeing right now, right? To where in very close proximity, we had it looked like we were going to get a death cross, and it didn't happen. But what did happen? We had consolidation. We had some volatility upward, a little more consolidation, and then boom, next leg up to new highs. So I like that pattern, if it is indeed a pattern. So here's yet another scenario. This one also different. We had the death cross that happened well in advance of the golden cross, right? This was back in 2014. In July, this actually, okay, here it is. Here's the actual death cross. This was very close to a death cross. It didn't occur here. It happened right here under the yellow arrow. We had that death cross between the 21 and the 50 in August, beginning of August 2014. And then almost 2 weeks later, we had a golden cross. And the market had already topped. This was already a downtrend in progress. So what's different here is that the macro at this point was the bull market had topped and this was a downtrend, bear market scenario. Whereas in, I mean, the market had topped way earlier, right? Way back here. So back in 2013. So this was really still in a downtrend. So not the same scenario because the macro is so much different this time around. We're in an uptrend. Let's look and see if we have any similarities here. Back in 2015, death cross. Here's the golden cross between the blue 100 and purple 200. And here's the death cross. That death cross didn't happen as quickly as this one is forming, the one that we're looking at in current time. But back in 2015, it again led to a peak in volatility, dumped price downward, followed by a consolidation period, and then the uptrend. So what I'm looking for in this scenario is more potential volatility, and we certainly have enough things to give to that could serve as catalyst for volatility, and some consolidation before the real next leg up begins. Now, when we get back to it, I'll revisit why we could potentially go lower again, but I'll also show you why we might have already seen where the bottom is. And I do think we've seen where the macro bottom is. I'm just wondering if we get another dip down lower towards the yearly open. But let's look at this one. This is 2020. And this is a scenario where, okay, this is coming off of COVID here. That was a bit of an anomaly, right? I think we can all agree with that. But we did have some technicals where price was similarly to what we're seeing now, golden cross between the blue 100 and the purple 200, right? That is a bullish signal. And where was the death cross? Didn't really happen. The death cross happened way earlier on this one between the shorter time frames, and it had really almost played out. This, like I said, was an anomaly because it was COVID. That dip probably, I'm sure, would not have gone as deep if it wasn't for the COVID scare. But you can see here, there was a golden cross on these shorter time frames shortly after, looks like about 2 weeks after that golden cross on the high time frames. And that's why things consolidated and boom, went up. So do we have any more of those? It looks like we don't have any more of those. So again, what I like about this scenario, and I think I can illustrate it best here on this timescapes chart, is so there's a couple of factors that I really like here. I like where the support tests went. I like how beautifully we had this test and this confluence to the 2025 weekly open, and I like how we had this test and this confluence to the trend line. What I was hoping for yesterday was for things to break down even a little bit further and come down here. But this is bullish that this 2025 weekly open held. I was expecting potentially to come down here and here. And that could still happen. We can't rule that out, right? This is crypto. You can't rule anything out. We could certainly see that. However, because of the strength of this move, and because we have some geopolitical things cooling off that could be support a more of a risk-on environment, we might see this continue. Now, one of the caveats that could bring it back down is we still have tariff uncertainty. I mean, we still have uncertainty on a lot of things around the world, including what's happening here in the Middle East, including Iran and Israel and Gaza, and of course, Ukraine and Russia, and God knows what's going to transpire with China and Taiwan. Not to make this a geopolitical discussion, but those things exist, and they will always exist, and they will always be potential catalysts for some volatility. Likewise, the tariff issue. Think that's a big looming question over the market. And Fed Chair Powell has even said, we expect to see some inflation out of tariffs once they start to stick. But we don't know what the exact tariffs are going to be on a country per country basis. That 90-day negotiating period that we heard about back in April ends the first week of July. Now, will all of those tariffs be set at that point, and the market will go, okay, we now know what it is, and we can bake that in, and we're good to go? Or is the administration going to kick the can down the road again and say, well, we still have some deals to work out. Here's what we think is going to happen, but blah, 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 hot air, noise, noise, noise. That's why I like to look at the charts, because regardless of what the noise is coming from all sources of media, legit or otherwise, or speculative, the technicals tell the story. The technicals do not lie. And I know that there's people who don't believe in technical analysis. I know there's people who don't like, I know there's technical analysts who don't like moving averages. I happen to like them. You use what works for you. I use what works for me. And I hope that in this process, you learn a little bit about how these things work. I mean, you could badmouth technical analysis all you want, but gosh, it's hard to dispute what you see right here, isn't it? I think so. So what I'm expecting at this point is a bit of volatility based on the death cross and the golden cross, and the market trying to figure that out. Right there are lots of people who are not convinced that. I mean, there's people who think we've been in a bear market, and you can think what you want. A downtrend does not define a market. A local trend does not define the whole cycle or the breadth of the macro market. So I think it's important to zoom out from time to time. Now, how will we know when the market is all in on long? Well, obviously watching the price action develop and looking for higher lows and higher highs obviously is a good indication. But what happens until we get there? I like to use order flow as a guide, as a gauge, and FireCharts gives us that ability. We can obviously see the liquidity in the order book here. This is the heat map showing where the volume is and where it isn't. And you can see we've cleared out a lot of liquidity down here. So, it would be very easy for price to return back down to these levels. However, at the moment, things seem to be holding up nicely. This is about a $35 million block. That's not a huge block by any stretch of the imagination. It just depends on what the market sentiment is. I've seen the market chew through $150 million worth of liquidity at a single level when it wants to. And I've also seen $8 million hold it down. So how do you tell? How can you know? And one of the best indications is when the order flow changes. So down here on FireCharts, we have our binned CVD, and we have everything broken down into order classes. Blue is the sum of all orders. That's true CVD. The orange one is smallest orders and $100 to $1,000 orders. Lots of people think that's retail, and it used to be exclusively retail in the very beginning, but over the years, whales have gotten wise, and they will use these smaller order classes a lot of times to either disguise their orders or simply to avoid slippage. Excuse me one second. So anyways, the difference here is the biggest order classes, brown mega whales and purple whales, they've had the most influence on price. And quite frankly, the purple whales have really had the most influence on price over the years because they deal in so much more volume than the brown whales do. So so you can see brown whales have been on this like steady accumulation for the last 6 months. Excuse me, that's not even a 6 month chart. Hold on, that's the 1 month chart. Excuse me, over the last month. Let's see. Let's zoom out a little bit and see. This actually began when things bottomed out on that tariff announcement, right? We talked about that double bottom down there, and you can see both order classes started to buy at that point. Purple has taken some profit in this area. Absolutely normal for that to happen. Meanwhile, brown mega whales have not done nearly as much profit taking along the way. But if we look at the sum of the volume here, um, just over this last 6 months, we could switch to absolute CVD, and we can see that mega whale volume, 162 million in the last 6 months. Meanwhile, the purple whales had, at one point, I mean, they've really been selling for the duration of this period. They've had peaks and valleys in that. And at this stage, the net was, let's see, at this point, negative 1.3 billion. So much more volume because of the frequency of trades. They're making smaller orders, but they're making a lot more of them. And so what I'm watching for at this point, we'll switch back to the normalized view, is to see when that purple volume starts to pick up again. And you can see, right, there's always buying dips and selling rips. There's always going to be traders in the mix here. But at this point, we have some, you could see consolidation, a little bit of profit taking in this range. So not yet decisive, just starting to break through. And this, interestingly, a bit of a divergence between the two order classes here, where brown is now profit taking at these levels. So this to me shows the indecisiveness of the market at this stage, which is what could cause more volatility and more consolidation before we really get to that big upside leg. And so that's what I'm really watching closely, really watching to see, right? This is slightly up on the day. A day does not make a trend. Day could be the start of the trend, but the day does not make a trend. So we'll be watching to see when purple really starts accumulating with intention. And if we look over the years, there have been times where that has been very, very clear, right? This is a 3-year view of the order book and order flow, and there were times where it was very, very clear. And since January, there has been profit taking. And so they began buying again off of this double bottom down here after tariffs were announced, and they have sold, done some profit taking on some of that Bitcoin. So this is something that we'll watch very closely and look to see this uptrend resume. The other thing that speaks to the market for me is what's happening market wide, and it's just, to me, we know that the current administration is crypto friendly and Bitcoin friendly. We know that they're investing in not only their own shit coins, but also in Bitcoin. And I had shared with you guys a week or two ago that after we saw the news of the Trump family raising $2.5 to $3 billion to buy a Bitcoin reserve for their crypto organizations, that they were also getting into mining, and that banks were being greenlit to start dealing in crypto in terms of the Stablecoin Act that just passed Senate and now has to go through the House. That one's likely to pass. And with JP Morgan creating their own stablecoin, and banks now being able to serve essentially as on-ramps for crypto, those are all, in my opinion, bullish developments. But I also felt like they were going to, especially the fact that the first family was going to be buying and banks were going to be looking to get in, were going to be ways to, or I should say, reasons for the manipulator in chief to tank the market so that they could make some entries. And certainly, at least one entity made some inroads to that. I'm pretty sure I know that Saylor has bought in the last week or two. Anthony Pompliano just announced that they made a huge purchase. What's his name? The real estate guy, Grant Cardone, also made a big purchase. I think 1,000 Bitcoin, and they have another few thousand planned. So things look bullish, in my opinion, for these guys. Let's see. Wakas, nice to have you, man. Thanks for your simple logical analysis. Always just back in the market after Donald Trump's ceasefire tweet at 101 and some alts at low. Thanks for educating in a professional manner. Hey, I really appreciate the kind words and the support, Wakas, and hope that everybody is safe around the world. I know some people aren't, but if you're watching this stream, I hope you're in a safe spot. So, long story short, I think that we are indeed in store for some volatility, and I think that we have signs that alts are capitulating. This is one of the metrics in the MI dashboard, and this metric shows the correlation between alts and Bitcoin. This is every alt pair on Binance. So there's about 400 Bitcoin pairs in here, and we could expand and get to each one and see them individually. But you can see just kind of the breadth of the market here is indicated. See this little blue line right here? That is an indication, as we can see down here, of capitulation among alts. And, some either have or are still in process. And relative to that, we can then look at another metric here in terms of, let's look at price returns and drawdowns and see how the market is doing. And really, in general, you can see that over the last 14 days, last 2 weeks, lots of alts in deep negative territory. That's, dark blue is like 20% or more, right? 16%, 19%, 18%, minus 25%, minus 21%, minus 25%. Pick a coin. I mean, the vast majority of them are way down over the past couple of weeks. And so it's time to look. If you haven't done so yet, you got to be looking for those setups. Drawdowns. And here's drawdowns, right? Drawdowns, minus 14, minus 20, minus 26, minus 12, minus 18. That's the same as the profit. They're in the hole. So look for those setups. If you're going to trade alts, this is the time. If you haven't identified those coins and those setups yet, you got to do it. This is it. This could literally be your last opportunity to have an entry point prior to the breakout. Now, again, doesn't mean we can't dip, but because we saw so much positive in the retest of support, because this was so picture perfect, it might actually stick, alongside what's happening with the Israel-Iran situation. Now, there's a chance that situation gets a little messier, and there's a chance that the tariff stuff backlashes a little bit, and that could send price down for another retest, or if for no other reason, just to shake people out, right? But look for that consolidation. Consolidations are typically good places to make entries, and I can illustrate that here on my long-term chart that I've shared with you guys. Look at these consolidation ranges. This is where I started building my long-term position, dollar cost averaging after the FTX crash, bought a little here, bought all along the way. Okay. And so have I executed every trade to the best of my ability? No, I have not. I haven't nailed them all as closely as I'd like to, but all you can do is the best you can do. And historically, these consolidation ranges, even this little brief one here in the 50s, um, even this one up here in the 60s, these were all good places to add. And now you see Bitcoin again in a consolidation range. To me, if we get another test of the 2025 open or even these moving averages, um, this is where I probably make my last entry to my position. I am 80% deployed at this point. I've got a little dry powder left, looking for opportunities just like this. So that's what I'm in tune to. Hope that gives you some insight as to what you should be looking for, and hope this helps you navigate this market. If you are concerned that the bottom is going to drop out, I don't think that things go any lower than this 2025 open for Bitcoin. And I am happy to ride this down because my average entry point is around 50K. So I'm okay with a little bit of volatility between now and then. If I can get another entry in at this range, I will. I was just I I had an entry down here, and I was just shy of getting filled. In hindsight, I should have had my entry right at the that timescape level, and I would have been perfect. I missed it by I was ballparking it, I was eyeballing it, and I missed it by a couple $100. So I'm okay with that. Wasn't a big order, but it would have been nice to add. Nonetheless, I did add in this range right down here, around the trend line. So totally good with that, and watching to see if we get another opportunity. But again, this is the rarest of rare signals. It has never been seen before on the Bitcoin chart. And now we have a golden cross between the 200 and 100-day moving averages, and a death cross pending between the 21 and 50-day that could give us a little bit more of downside before we consolidate and break out to the upside. Those targets are for another stream. We've talked about them in the past, so you can always go back and revisit those. But obviously, I would be looking for new all-time highs in price discovery that take us well beyond where we are. I think that in terms of where targets go, I think that we had the near range targets in that 120 range based on this cup and handle. But I think the macro is developing the outlook for Bitcoin with all of the adoption coming from banks, especially, and institutionals and corporate treasuries are a big deal. And so I think price could go way higher than that 120. If we go fib based, maybe we get to the 130 range this cycle. But I mean, these macro events and this president could push things much, much higher. So I'm prepared for that. I hope that you are too. If you've been in the game for a while and you own Bitcoin already, congratulations on being early. This is what we've waited for. The time is coming soon. Find your targets, know your invalidations. And for me, in terms of invalidations, it would very simply be if we lose the 2025 open, that's my line in the sand. Losing, let's see, I've got that screen right here. Losing this level down here, that's at 93.4K, 93.3K, depending on your exchange. Losing this would make me question things. And when I say losing this, I mean a weekly close below this 2025 open would be concerning to me. Anything short of that, anything from here to here, I'm happy with. I'll buy it with a big old grin on my face and look forward to the upside. Hope that helps you out, guys. Again, if you want any info on any of the tools I'm sharing with you, links are in the description. And if you haven't yet joined our free Telegram channel, the Material Indicators Telegram channel, do that. The link is in the description of the videos. It's also on the Material Indicators X page at mi_algos. Check it out. Thanks again, guys, for your continued support. Hope this helps you out. And if nothing else, helps you identify the opportunities that are coming up ahead of you. Thanks, guys, for following along. We'll talk soon.